What's up, everybody? Welcome to the Stocks channel. My name is Corey, and today in the stock market, we're finally seeing some volatility, but we still see a strong tech sector leading the way. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY, we were down 0.36%, and we still see SPY getting rejected at that strong resistance level at 453. Now pay attention to that resistance because it will be a very strong resistance level, and I don't want you looking too far ahead. We do have price targets at 457 and 461, but you don't want to start paying attention to those price targets until we get two decisive breaks above 453. We haven't yet had two decisive breaks above that level, so you really don't want to look too far ahead because it's always possible that we already did top in the market, and this is the only resistance level you need to pay attention to. Now, the other thing you need to pay attention to is the price action. So we do have price action back below the 5 EMA, and even though we still are in a strong bull trend, you want to be very cautious of the market rolling over at these levels. We have downside support levels at 451, 449, our 20 simple moving average at 447, and below that, it will look like the market's rolling over, and then we could come back down to close the gap around 443.8. Now, the other thing I want you to pay attention to is we have to switch over to a 1 hour chart to see it. And on a 1 hour chart, it does look like we're starting to see some double topping going on. We got up just above 453 two times in a row, and we did see resistance at that level two times. Now, the significance of the rejection of that level is that we did get price action breaking below the neckline. So when you see a double topping pattern, it's not confirmed until you break below the neckline. As you can tell, we clearly did break below the neckline of support, so this is an official confirmed double topping pattern. When you get a double top, you usually will travel the length of the distance from the top to the neckline, and as you can tell, that does take us down to about 449 to 450 on SPY. So this is telling us with the confirmed double top that there is more downside coming, and anytime you do get downside in the market, you always have to be cautious that the momentum of the selling picks up and you start to get more massive elevator down type selling. Remember, the stock market takes the stairs up and the elevator down, so you need to watch the next support level right around 449 very closely. If that support level does not hold up, we could see SPY starting to roll over, and this double topping pattern on the 1 hour chart could be the very early warning sign that we've already started to roll over. It's way too soon to know for sure, but it's just something that you should pay close attention to. So jumping back over to the daily chart, watch that strong resistance right around 453 because it is possible that's the level we're getting to before we see a stock market correction. We have the gap to fill all the way down here. That's another 1.7% drop, and the 50 EMA is right around 440. So there is plenty of downside if we do lose the strong support level right around 447. Watch that critical support, and as long as we're above that level with the full bull trend, you need to remain bullish because you need to be objective in a bull market. If you try to call a top too early and you try to short a bull market, you could easily lose a lot of money when the market decides to head back higher and go to the next price targets. So stay objective and watch the price action at support and resistance. If price action is staying above critical support levels, there's no reason to believe that the stock market has to correct at this time. Also pay attention to the volume because if we're going down, we're going to see a spike in volume, and we still just don't see enough volume to bring this market lower. Without high volume selling, we're not going to see the stock market rolling over because these strong bull markets do not die easily. Jumping over to the NASDAQ 100 triple Qs, we were up 0.14% today, and we're still at that resistance level at 382. So SPY and the triple Qs are sitting at resistance, and we do have very critical resistance at these levels. Remember, all of these levels could lead to a pullback or even a correction, so respect these levels very closely and watch the price action at these resistance levels. Above 382, we still have the price target at 388, but just like with SPY, don't look too far ahead. The most important resistance on the triple Qs is right where we're currently at 382. To the downside, we have support at 376, 373, and 370, with 373 being the critical support that we need price action to stay above. Below 373, it's possible we close the gap at 368 or come back to the 50 EMA around 366. Now let's also switch over to a 1 hour chart on the triple Qs, and we could see a very similar potential double topping pattern forming on the triple Qs. We're back to that resistance level for the second time, so if we get rejected and we come take out this neckline, that would be a confirmed double topping pattern, and that could take us all the way down to our critical support around 373. So pay attention to the price action, and that neckline is right around 379. If we get price action below 379, that will be a confirmed double topping pattern on the 1 hour chart. And just like I said with SPY, that could be the catalyst that gets the high momentum selling started, and that could lead to the stock market correction. So watch these critical resistance levels because they do look like we're getting a double top look. And if you get the confirmation price action, you'll know immediately how to react to the price action. So jumping back over to the daily chart, watch that strong resistance at 382 and that critical support down here around 373. Jumping over to the Dow Jones, we could see a huge sell-off going down 0.76% today and closing below critical support. So is the Dow Jones leading the way in the stock market correction and we're already there? It could be, because typically speaking, the Dow Jones does top out before SPY and the triple Qs. So price action did roll over on the Dow Jones and we did lose the bull trend, with the price action slicing right through critical support. The good news for the Dow Jones is that strong support at 351 is currently holding up. But if we start breaking below that and we break below the 50 EMA at 350, we could see things getting from bad to worse, and we are starting to see a spike in volume on the Dow. This is still relatively low volume, but this is definitely increasing volume on a red day, and that could be the very early warning sign that the stock market is ready for a correction. So watch the Dow Jones closely, because typically speaking, if the Dow Jones is rolling over, we could see the rest of the stock market following suit. The critical support you need to watch now that we're below the 20 simple moving average is 350 at the 50 EMA. Remember, there's no longer a bull trend, so the Dow Jones is already looking significantly weaker. So don't be in a hurry to buy the dip. You need to watch the critical support levels and make sure the price action is bouncing off of those levels. If we keep slicing through support, we could go much lower, and there's still a gap to fill down here at 346. On the Russell 2000, we were down 0.69% today, and again, we lost a pretty important support level. IWM closed below 227, and we did get rejected at that resistance level a couple of days ago at 230. So the Russell 2000 does not have the full bull trend, and we could start rolling over yet again. So the most critical support level to watch on the Russell 2000 will be 222. On the way there, we still have support at 224, so watch that level as well. Below 222, look for the gap fill below at 216, and to the upside, you'll have resistance at 227 and 230. On the Arkk ETF, we were down 0.29% today, getting rejected at resistance at 125.6. We're very close to having the full bull trend, but we haven't yet seen the 20 simple moving average cross back above the 50 EMA. To the downside, watch support at 122.8 and the strong support level at 120. If Arkk closes below 120, that will be a rollover look, and we could easily fill the gap at 116. To the upside, look for a breakout above 125.8 to send us to the next resistance levels at 128 and 131. On the VIX, we saw a huge spike in volatility today, with the VIX going up over 10% and finding that resistance at 18.2. Remember that the VIX has been forming higher lows, and I've been warning about all of the signs in the VIX that tell us a sell-off could be coming. Well, this is a further confirmation of volatility, and selling could be right around the corner. If we see the VIX spiking above 18.2 and getting to 20 and beyond, we could start seeing that stock market pullback. If we see the VIX spiking and closing above 23, we're now looking for a stock market correction. So right now, this could be the very early stages of a stock market pullback, and if things go from bad to worse, we could start seeing that pullback ending up being a stock market correction. So take these warning signs seriously, and this is typically a very volatile month going into September, so you want to respect the fact that the VIX is telling us to potentially look for more downside. If we see the VIX getting crushed back down below 15 and heading towards 14, that will be your bullish indication that we're going to continue to climb higher towards new all-time highs. On Bitcoin, we're currently down over 11%, and we see a very ugly bearish engulfing candle on Bitcoin. We did slice right through that critical support level just below 49,000, and we still do have the bullish trend. However, Bitcoin is typically a good indication of a risk-on environment, and this candlestick does not look like a lot of people are going risk-on. This looks like risk-off, and it looks like people are running for the exit, and we did see a massive sell-off today that took us all the way down to the critical support level at 43,000. We're currently above the 50 EMA at 45,000, so this thing is not rolling over and dying just yet, but obviously this could get worse very quickly. Watch for the strong support levels at 45,000 and 43,000, and below that we could come back down to about 41,000. If we roll over and we close below 41,000, Bitcoin will be looking a lot more concerning, and it could come all the way back down to 30,000. So be cautious at these levels, because these are very critical supports. We did get the confirmation breakout above 51,000, so that does mean we could start climbing to 58,000, but if we lose the bullish trend and we lose critical support, it's going to look more likely that we have to go lower before we can go any higher. So watch Bitcoin closely, because this is a very ugly looking candle, and if we lose another critical support level, we could see another waterfall wave of selling. On Amazon stock, we were up 0.9% today, and it did look like Amazon stock was trying to break out, but we did close right on top of the resistance trend line. So yet again, Amazon is failing to break out, and it just can't get price action to break out and close above the resistance trend line. That resistance level was right around 35.10, and we closed just below it at 35.09. The gap close is still above at 35.80, but we need to get that confirmation breakout. We did close above 3,500, so we could get another attempt to break out as soon as tomorrow, and we still will have resistance at 35.52. So watch resistance right around 3,500, 35.52, and the gap close at 35.80. Above the gap close at 35.80, we could start running back up to new all-time highs, but we will have resistance on the way there at 3,700 and 3,760. To the downside, we have the most strongest support level at 3,400, so watch that level closely. Below 3,400, we could be coming all the way back down to 3,311. On Tesla stock, we did get a breakout confirmation today, bouncing off of that support level at 732 and closing up 2.64% higher. We did leave a gap just below around 734, so look for that potential gap close, but we're getting very close to the price target above at 765. Above 765, we could start running and talking about brand new all-time highs, but that will be a very strong resistance level. We're still seeing Tesla going up on increasing volume, which is obviously very bullish, and we still do have the full bull trend. So look for downside support right around 732, and below that we still have support at 714.5 and our 20 simple moving average at 711. If we break below the 20 simple moving average, look for strong support at 692, and overall we still see Tesla forming higher highs and higher lows, so it's still looking very bullish. On Apple stock, we had a very bullish day today, going up 1.55%, and we did see Apple hitting my price target at 156. I did raise that resistance level by $1 based on new price action. We'll now have strong resistance at 157. So the biggest thing I want you to take away from Apple stock is that we met all of the upside price targets, and while we can continue to climb higher from here, it's very likely that Apple could go through a correction at any moment. So now is not the time to be taking on a ton of risk. It's more likely the time to get more defensive and more cautious of downside. Remember, Apple's our market moving stock, and it did hit our price target, but if it does break out above 157, we could start running up here to 162. So above 157, you're looking for 162, but just be cautious and don't get greedy at these levels. We're closing above the upper Bollinger Band, and while we are still in a full bull trend, it could be time for a cool down, and we could see Apple coming back down to support. So watch support levels at 151 and our 20 simple moving average around 150, and below that, the 50 EMA around 146. Below 146, it'll look like Apple's rolling over to come close the gap at 137. On the financial sector, we were down 0.6% today, and we did see the financial sector rolling over. Price actions below 3 of our 4 moving averages, and we did lose the bull trend, so it does look like we're coming back down to test that 50 EMA as support. The industrial sector was down 1.73% today, and this is definitely a bearish looking candle slicing right through critical support. We lost the bull trend, and price action is below all the moving averages. This is not a candlestick you want to ignore, and you should be paying close attention to this huge sell-off in the industrials. The healthcare sector was down 0.58% today, closing just below the 5 EMA and retesting critical support at the 20 simple moving average yet again. You can see the trading range in the healthcare sector getting a lot tighter as it goes through a consolidation. If we close below the 20 simple moving average, it will look like the healthcare sector is starting to roll over. The energy sector was down 0.6% today, closing below all the moving averages, and it does look like it could be going back into a bear market very soon if we can't get price action back above the 50 EMA. So jumping back over to the S&P 500, there's definitely a ton of warning signs in the stock market. The VIX continues to climb higher after forming higher lows, and we do look like we have a double topping pattern on the 1 hour chart on SPY. The triple Qs could be right behind with another double top, and we already look like the Dow Jones is starting to roll over. So this is not a market you should be taking a lot of risk in, because this is definitely a bearish month going into September. And if there's ever going to be a time for a stock market correction, now technically is the best time going into one of the most volatile months of the year. So look out for a potential stock market correction, but don't just assume that we have to go through one. I still want you to remain objective, and I want you to watch price action at critical support. As long as we're staying above critical support and we're maintaining the bullish trend, that does mean we're still in a bull market and we could continue to go higher. The only thing I would say that goes against that is it does look like the Dow Jones is already rolling over, so you might want to get a little ahead of a potential correction and protect yourself to the downside immediately. The worst case scenario is that you prepared for a correction and didn't get one, but at least you're preparing for something that could be right around the corner. Don't go crazy trying to short a bull market. Just do what you need to do to protect yourself to the downside, and there's plenty of ways to hedge your portfolio. So watch those critical support levels and pay attention to the price action at those levels, because if we hold up above support and we bounce, it does mean we could continue to go higher. Also remember that I have my own trade alert service called BANC Trade Alerts that only trades TQQQs, and it does very well in all market conditions, but exceptionally well in volatile markets. I'm currently running a 50% off promotion code for your first month, so now could be the best time to try out BANC Trade Alerts. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link in the description. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.